Well, let's focus on the first management. That Visaka Industries posted a good set of numbers in the first quarter. The profitability jumped up big time. The margins also expanded, particularly in their building products business. We have Mr. Vamsi Krishna, the joint managing director of Visaka Industries, who joins us to run us through all those details. Well, a splendid quarter, Vamsi, and the numbers look quite good as well. Tell us, what worked for you all in this quarter? Is it due to the price increase that you saw? Is it better product mix that played out for you all? And can you hold on to these sort of margins, particularly in the building products business is what we're talking about?
Sure. Very good afternoon, Nigel. Thank you for having me first off. And it's great to be with you today. Talking about performance, I think it's been an effort of almost 1.5 years since we started working on our cost reductions. Actually, the whole effort was on how to make better business, even without the COVID experience. So we've been working on reducing our expenses over the last 1.5 years. And I think it was in good time that when a crisis hit, that the company fundamentals stood strong. Coming to the building products, I think overall, the margins in the boards business and in the roofing business have been much better over the years. The boards, when we met last time, we were talking about increase in margins and increase in sales. I'm very happy to share with you that today we are the market leaders in terms of manufacturing capacity and the sales in terms of boards. In roofing, last year we hit #1 position in sales, which was a very big achievement in spite of a slowdown. So all these factors really helped us to see the numbers that we're looking at today.
So all of that is fine. Of course, this is backdated information. But if you can tell us, how has July been so far? What kind of demand have you seen? In which segments are you seeing higher amount of demand? And do you think it's sustainable?
So Sonia, all that information actually led to the achievement. That was the intention of sharing that with you. July, of course, we are seeing a similar trend as last year or the years before, because it's a seasonal demand in terms of the roofing. But the VNext division is definitely very positive for us. We do see markets opening up. The metros being shut for a majority of the year, this financial, was definitely impacting us. But going forward, we are looking at much positive numbers. We've done a great push in terms of June, July. I think going forward, as the lockdown opens up, we'll be doing better numbers in the building products. Even when in the textiles, the first half has been really, really painful for us. In fact, because of Mumbai being shut down completely. As we see lockdowns open up, I think we'll be seeing good contribution from textiles as well.
Well, Vamsi, give us a couple of numbers then. You're saying that you're seeing good traction on the ground in the first quarter. If I look at your building products business, let's focus on that first. There's a degrowth of closer around 8% approximately. Last year, you did a revenue of around 835 crores. For the full year in building products business. So this year, what is the target by the end of this year? Point number one. And second factor, you said that, you're one of the leaders. Earlier today, we were joined by the management of HIL. They said their market share is at around 21% and it's improved by 1%. What is your market share?
So, rightly said, Nigel. I think first off, in terms of numbers, I think we'll be achieving what we did last year, because we lost almost the first complete month of the first quarter. So in terms of that, as you know, the majority of the sale for the roofing business happens in the first quarter. In spite of losing that, we are confident that we'll be able to match up with the numbers that we achieved last year, both in the boards business and in the roofing business. Textiles, we are seeing that there will be a dip because we've lost almost 4 to 5 months in terms of a market push. So we'll be seeing anywhere around 60 to 70% year-end in terms of what we can try to achieve in that segment. In terms of market share, I think HIL and us will be fighting now in terms of who's going to sell more, because capacity-wise, definitely HIL has larger capacity in terms of manufacturing for the roofing segment. But the game today is about marketing and how best we can push forward.
Okay, so in the building product segment, I just want to understand what, this margins that you saw of almost 23%, has it come because of a price hike? Is it because of a raw material drop? You mentioned some of that, but I just want to understand what could the triggers be going ahead which will help you sustain the margins at this high level?
Sure. So first off, it is the cost, right? What we've been seeing over the years is that there was a very high increase in raw material costs over the last 3 to 4 years that the industry experienced. That we are looking at how we can replace costs, and we've been working on how to reduce our expenditure on that front. So that's number one contributor for us. Secondly, definitely due to the shutdown, the demand pent up for the 1 month of sales that we didn't have definitely had a price hike increase for us in terms of a market demand. Overall, the industry itself had a very good price demand because of the situation in the lockdown. Going forward, I think if we can keep our expenses down and the prices, if their prices are maintained in such a fashion, we'll definitely be able to maintain our margins. Talking about the other businesses also, we are seeing that we are getting good traction in terms of margins as well. The businesses which were being supported by our roofing business will need much less support today because they'll be starting to contribute to the top line and bottom line as well.